Hey, what's going on, guys? I want to do a quick update on Stellar Lumens. The ticker for this is XLM, and I'm currently on the weekly time frame. Now, before I get into this, I should say that if you're not subscribed and you want to get notifications when I release new videos, I'm going to do about 2 or 3 TA videos every single day. Just click subscribe, click the bell, and then click on all, and that way you'll actually get the notification. If you only click subscribe, more often than not, YouTube's not even going to show you my new videos. Okay, so if you like the analysis, you find it helpful, that would be good if you did that. And yeah, let's get into this. So I probably did about 3 or 4 videos on this coin already, but something new is happening on the smaller time frame that I want to cover. So before I get into that, just in case you didn't watch my previous videos, I'll just give you a macro view of what has happened so far and where we are. So when I look at a chart, I always like to start from either the monthly or the weekly time frame, and then kind of like scale the time frames down from there, right? So I want the big picture of what's going on. So the big picture of what's going on here is we had this multi-year falling wedge, this descending wedge pattern, which we recently broke out of. And not only did we break out of it, but we retested it for about 2 months. 2 months of retesting this level, which finished off with this very bullish doji pattern, but it had like this very long wick, right? And we bounced off of it, and that's what basically shot us up. We came all the way back, retested this level, almost like this would probably be like a triple bottom here. And then I think there was a lot of speculation and good news regarding this coin. I think it had to do with the Fed now payment system, right? The slave system there. And then it just had this massive breakout, right? So here we are. If you're going to trade this asset, there's a few lines I suggest drawing on the chart. I mean, these ones are not really in play anymore. This pattern's already done with. But this horizontal level, around 13 cents, okay? Because you see it was support here, was resistance here. And then if you look left even further, it was support right here. So this is a very significant level on the stellar chart, okay? The next level I would suggest that you draw, and we had this drawn in even before we got slammed down here, I'm pretty sure. It is around 0.1769. 0.1769. So if you look left over here, you see it was resistance right here. So these two candle bodies closed below it. We had like the price came up, but come Sunday evening, this weekly candle sold off and the body closed below it. So, and then here, once that happened, basically the bears kind of took over and dumped it back down. And then, of course, we came down to the other line I just suggested that you draw, and that was the support, okay? So these two levels are quite significant. And there's something else significant about this line, right? So now that we've broken out of this falling wedge, we want to look for potential targets to the upside, right? So one way I do that, okay, the primary way is look at the price action, right? So you say, okay, this is likely going to be a level, right? This is likely going to be a level because we have price history in this area, right? This right here, the top of this these candles is likely going to be a level, and then you would just look here. This is likely going to be a level. So just look at the price action first and prioritize the price first. Then what you can do is you can go over here, take the fib retracement tool, and try to identify where the top of this wick is. Click and drag it down to the bottom. And that's going to give me these projection levels, right? And what I want to see is I want to see where these fibs line up with the price action, right? So for example, right here, where I told you where I suggested you draw this horizontal level, see this is the 382, 38.2, and the Fibonacci actually covers this this level, right? The horizontal line is covered right now by the 38.2 fib. So that's just called confluence, right? So I have price action and Fibonacci confluence at this level, and that's why I think it's going to be a tough level to get through. And as you can see that, you know, we came up, we tried to crack it 3 times, 3 weeks in a row, and it got rejected every single time. Okay, the next level beyond this is, this lines up perfectly too, right? See this 50% Fibonacci level lines up perfectly with this, this little high right here. Okay, so that would be the next level. If we're able to break through, what I'm going to show you in a minute, it's a pattern, it's a bullish pattern. If we're able to break through this bullish pattern, or sorry, this pattern breaks bullish and we're able to break through this 38.2, the next level I would target personally would be around 23.5 cents, so 0.2351. That would be the next level I would look to. If that level breaks, then it's going to be this zone right here, this golden pocket zone, and that comes between about 31.5 cents up to 34, 3421 around there. But also this cluster right here is also likely going to give you a little bit of a problem. Okay, so what I want to show you now is I'm going to change the time frame. So now I'm on the weekly. Let's take a look at the daily time frame and see what's going on. So you see right here, we're forming this triangle pattern, right? The price is just kind of bouncing between this downsloping level of resistance and this upsloping level of support. We have multiple touches on each level. So this is just the range that we're in right now. And what's interesting about this is this could be drawn multiple ways. Like if I want to draw this from the candle bodies, this would also be valid right here. So we have, multiple rejections, the candle bodies right along here and also right here, right? But if I'm going to trade a breakout, I want to be extra sure because, a lot of the time it'll break out of here and then it'll get rejected right here and come back down. So I'm going to trade based on these wicks right here. I'm going to run it from the top and then connect with this wick right here. So this way I know if we break out of this level, I just have more confidence that it's for real and not a fake out, right? But I mean, yeah, a lot of people are going to be drawing it like this, and then you're going to see all kinds of tweets and YouTube videos if you follow the stellar community calling for a breakout. If you see the candle body close above here, but me, I'm just extra conservative. I'm only going to trade the long if we crack this level right here. So yeah, if we start closing basically a daily candle above this level, that's my cue to maybe take a long position, and I'll place my stop loss. I'll find a tight backstop for my stop loss. So my stop loss would be below this level of what's now resistance. I would hope that holds the support, and I would place my stop loss just below there. Okay, so I'm going to change the chart right now, and there's something else I want to show you. So okay, now I'm on the 4-hour time frame, and as you see, I was trading this range right here. So this was the previous upsloping level of support. It was a lot tighter. Unfortunately, this broke down. I'm not sure really what happened at the time. Maybe Bitcoin dumped or whatever, but this broke down. Okay, and as you know, former level of support, once you break it, is going to be the new resistance, right? So we broke down, we came back up, we tried to get above it, but this now is the resistance, and it sold off, right? So now this is not really this will only be at play if I extend it out, right? If I extend this out, which you could do just so you're aware of it, and as this price comes up, this may still be a resistance level, okay? But for now, I'm just going to get rid of it. And yeah, this is the new support zone right here. So you have multiple touches across here, right here, right here, right here. So this is basically the support line that I'm looking at right now. And I have this drawn on the 4-hour. And if I wanted to take some smaller time frame trades, then this is what I would work with, right? So for example, right now, if I entered right here, I mean, it's because this range is we're approaching the apex point. For me, it's a no trade zone because it's just not, the reward's not there in relation to the risk I'd have to take. But let's confirm that. Let's say if I take my long tool here to calculate, if I was to enter right now, I would place my stop loss below this low, and this is the previous day low right here. That's where I place my stop, and my take profit would have to be the probably right here. Basically, it would only give me a 1-to-1 risk reward ratio, so it's not worth taking in my opinion, right? I'm gonna wait for the break. So I mean, just to recap, I'd have to place my take profit right at this downsloping level of resistance, and yeah, for every risk reward ratio of 1 to 1.1. I risk 1.50% to potentially get 1.64%. I don't really take these trades, right? So I'm going to wait for a break in either direction, and I'm going to play the break. So like I said, if we break a daily candle close above this downsloping level of resistance, what I showed you on the other chart, that's my cue to take a long, and my first target for the long is going to be up here, right? It's going to be, right up here. This is where I would target my long, right? Now, traditionally, this is an identifiable pattern, right? This kind of looks to me, it's kind of, I mean, if I place this little low, it looks like a pennant, or it could be just a symmetrical triangle, right? Normally, when you have this big flagpole, it's considered a bullish pennant, and it makes a difference because your upside target based on the pattern is going to be different. So if you're trading a pennant, you're going to take the flagpole and project it from the breakout point. And if you're trading a symmetrical triangle, you're going to trade the highest and lowest point within the triangle, right? And they're going to give you two different targets. So for example, if I take the trend line and I do the length of the flagpole, and then I project it from the breakout point. So say, for example, we broke out right here, right? Where we are right now. I'm going to go to the weekly time frame, and let's see how that lines up. Let me reset the chart here. Bang. That brings us right up to the golden pocket zone, right? Okay, that's interesting. But if I was really conservative in my target with this, I would just trade this range right here. So I would take my line from the top to the bottom of this pattern here, and then I would project that from where we are. But I mean, we may break out like over here or whatever, but let's just say if the price broke out right now, then I would switch my time frame so I can get a better view, reset the chart, and that would take me right up to this 50, right? Now, a lot of the time, like these patterns, when they break, they don't reach target. I prefer using just basic Fibonacci and support and resistance levels, right? So I'm not going to just assume that it's going to blast through this 50 and make it up to the golden pocket because, you know, the flagpole was that length. I'm not going to assume that. I'm going to assume that once we crack this 38.2, once we break out of this pattern, I'm going to assume this is the next resistance, and you'll see that this most likely is going to be the next resistance, especially the first time the price gets to it. There's going to be sellers waiting right up here, okay? If this level breaks and you start closing candles above this level, then this is the next range I'm going to target. Okay, so I think that about wraps it up for XLM. I've given you basically, it looks very, very bullish, right? We broke out of this multi-year falling wedge pattern, and now we're just forming kind of like a bullish triangle pattern after a large impulsive move to the upside. Just trading basic price action, we can see that we broke, and this was a critical level to break right here, right? And we've kind of reversed trend right now. We put in a higher high in relation to this. So the downtrend is broken on this. And now you got to trade as if you're in an uptrending bullish market, because we are. And because of that, we're in a bullish pattern in an uptrending market. So I'm going to assume this is likely going to break to the upside, because that's statistically, that's what's likely going to happen. And yeah, just trade that. So I'm hopefully this breaks to the upside, and that'll give us some good entries to the long side, right? And then obviously if it breaks down, you have your support levels. I already marked them out for you. Okay, guys, hopefully you found that helpful. If you did, once again, click that subscribe button, click the bell, click on all. And I'm going to mention that I put the link to the exchange that I'm using to trade in both the description and the pinned comment of this video. And if you're in Canada or the United States, you may need a VPN to use it. So I also put a link to a promotion on a VPN as well in the pinned comment and the description. UAE is very crypto friendly. I'll just say that. So yeah, guys, hopefully that helps, and take care. Have a good day. Bye.